Do you think the Fed rate cut was a mistake?
Absolutely not. Not at all. It's been very interesting to watch the revisions in economic activity. Until this report, the revisions in the employment numbers had been down, and they were much weaker than had originally been reported. We look at earnings reports and look at their revenues, and we're seeing a lot of companies showing negative revenues. So the headline numbers are heavily influenced recently, certainly in terms of some of the upward revisions in personal income by transfer payments, that's government stimulus, and interestingly, dividends. But not if you look at the economy, the cyclical part of the economy is sick. It's sick. If you look at the sectors in the economy, one by one, they've been falling into a recession, no matter what the headline numbers say. Housing went down immediately when the Fed started raising rates. We're down 20 to 40% still. That's a recession. You've got non-residential construction in recession, autos, very weak.
Cathie, I know it's a backward-looking number, but then what do you make of today's payrolls report? 254,000 jobs added to the economy for the month of September. And that doesn't seem recessionary.
So if you just let me finish, Tim, I'll get to that in 1 minute. So we've got those sectors, and then you've got the small and medium business sector. Their confidence is at 08-09 levels. And we've got certain pricing measures, certainly the cyclical ones, that have been deflationary, actually. So one thing that I do think is going on that is helping is as prices are coming down and the consumer's getting better and better deals, and they're spending. So I think that is sustaining. A lot of people say real growth causes inflation. In this case, and actually in history, most times if you cut prices, you'll get more activity. The consumer, as long as the labor market hangs in here, and yes, today was very reassuring that way. As long as the labor market hangs in here, and companies like Walmart and Costco and auto companies either increase their discounts or cut their prices, I think the activity will come. And the labor market will continue to hang in. But if they try and jack prices back up, it was very interesting to see FedEx, after turning positive in revenues and then turning negative year over year on revenues, basically saying they're going to use prices to make it up. I think that's going to backfire. And I think during the next year, that many people will understand how deflationary the undercurrents are in the economy. Now, deflation is not always bad. Part of it is because of innovation, technologically enabled innovation. The car prices, EV prices are coming down. Their costs are coming down too. So I think there's a lot of confusion in terms of what's going on out there because productivity is stronger than expected, giving companies the latitude to cut prices and salvage margins. If that sustains, great.
Cathie, when we talked with you earlier this year, let's go back to March for a moment. You mentioned the possibility of inflation going negative this year. You also talked about unemployment going above 5%. Are those still your calls?
Yeah, this year, we're going to have to push it out because inflation did levitate as companies tried to price to make up for shortfalls in unit growth. It levitated in the 3.5% to 4% range. Now it's broken below 3%. And we're hearing more and more companies, basically trying to attract consumer attention with lower prices. So yes, if you look at money growth on a year-over-year basis, it was negative for, I think, about a year and a half, maybe more. Money is a leading indicator for inflation, and we do believe that inflation will go much lower than people expect right now. Wouldn't be surprised to see it go negative, especially if the consumer is worried about job loss, whether because of AI and automation generally, or what have you. So the saving rate tends to go up during those periods. And that will mean, we believe, that companies will have to price even more aggressively. In terms of over 5% unemployment rate, we could see it. We could see it. I will say today gave me pause in terms of this productivity dynamic and sort of companies may not, if they get the productivity growth from existing employees, they may not feel like laying them off. They can lower prices to keep consumer demand going.